Ladies and gentlemen, welcome to the Midday Market Monitor. I almost said Tech Frenzy. Now, I don't even know if it's okay for me to call this a market monitor. This is market madness. PayPal is now down more than 20% on them missing earnings, guiding for essentially negative EPS growth. Alex Chriss got ousted from the company. This is an absolute bloodbath, okay? But this does not even stand alone in terms of the companies that are dying off the most today. We have Fubo down 24% on the day. Actually, not as bad as it was earlier, down over 30%, but still $1.72 on this name. Galaxy Digital down 20%. Figure down 15%. Novo Nordisk got halted today, now down 13.5%. Unity down another 12.5% on Google's Genie project that they ended up putting out the whole generative world models and stuff like this. Very cool, but not great if you're a Unity investor. Now, unlike these names like Fubo or PayPal or something like this, PayPal ended up showing off, misses across the board, bleeding market. This is horrible, right? This is not what you want to see. So there's two types of companies that I would say during earnings that you need to sort of separate because they're all going to bleed, right? We're seeing red across the board, but there's two different businesses. There's one, PayPal, which is, missing earnings and of course getting obliterated. And then there's SoFi, which ended up, beating on earnings. There's these companies that are triple beating, guiding higher, and yet they're still getting beaten up. So if you guys have capital and you're looking to deploy or looking to slowly run in, maybe you don't think that this is the end of the sell-off. Maybe there's more to go. Look for names that are getting sold off, but yet continue to show up in terms of actual beat and raising, showing off great earnings. ServiceNow might be another one of those. Now at $109, right? Down 7.6%. Shopify, this is a huge name in my portfolio, down another 10%. Trust me, guys, I'm feeling it all the same, okay? This company's getting obliterated, now down 118%. Interestingly enough, that whenever we actually look at this market and we sort by what is working, of course, the VIX, that's not a good sign, right? Maybe there's some VIX hedges that you could potentially look at, but I'm not even, going to talk about that right now. But energy fuels, ASTS, Palantir, obviously, this company is like the earnings that they just showed off, unbelievable. Once again, now guiding for even faster and more accelerated growth on their accelerated year-over-year growth rates that they've continued to climb up to now at 70+%. Better margins, might be the greatest software name that we've ever seen in public market history. And I'm not even kidding. I know the valuation's high and I'm not looking to buy into this strength, but boy, oh boy, I'm blown away every single quarter and I've got nothing bad to say about Palantir. TeraWulf, Bloom Energy, Oklo, Centrus Energy. We're still seeing a lot of names. Walmart now actually passing $1 trillion in market cap. Some of these defensive names, financials, but also NeoCloud names for some reason. Let's see if Nebius is still green. No, slightly red now. Coming down with this broader QQQ sell-off. The thing is that what we ended up seeing, news just recently passed the desk. U.S. military shot down an Iranian drone that approached U.S. Navy aircraft carrier in Arabian Sea. This was U.S. officials telling Reuters this story. This happened at 12 p.m. This was not long ago. In fact, you can point it out right here. This big red candle. Actually, yeah, you can see this candle is 12:12 to 12:13. So literally, huge sell-off on that news. Is there concerns that there's essentially going to be a potential new war, conflicts that arise? People are getting a little bit worried. Well, there's also a transition away from potential SaaS names because people are also, artificial intelligence. It's actually so much not a fad that people are realizing that this is so real that it's going to impact every business, and it might not affect every business equally. That some companies' potential, new customers or something like this will potentially look to build their own services rather than pay, maybe a Salesforce or a Shopify or something like this large, egregious fees for those services if they can build them in-house. Now, I don't think that's exactly how it's going to go down. So I'm actually going to try to put new money towards some of these large sell-offs. And you don't even have to pick speculative names. I don't think it's time to go into a PayPal or something like this and look for egregious deals. I think there's big deals right here. Microsoft, down another 2.7%, $412, but to fall under $3 trillion market cap. And people are looking at this name and saying, hey, maybe software or maybe artificial intelligence names are going to essentially redesign what a Microsoft 365 would be, or some of these other tools that they might be using at Microsoft, even though they have Azure and they have LinkedIn and all of these things that potentially are not looking to go anywhere. Microsoft might just be this deal that we're looking for. Let's see what everyone in the comments are saying. Broadcom, let's take a look at this name really quick, down 6%. That's just crazy. Oh, man. Nvidia ended up getting in a little bit of a feud with Sam Altman. I'm sure you guys have seen some of the stories online. Essentially started out with Nvidia saying that, supposedly in a private conversation that got leaked, that Jensen said that he was not happy with the way that OpenAI was running their business. And then Sam Altman said that they are not happy with Nvidia's chip performance and that they're not getting answers fast enough with ChatGPT using Nvidia hardware, so they're going to look to use other products. Then, Jensen Wong ended up saying that the talks over the $100 billion quote unquote commitment was never a commitment at all, and that if they see fit to potentially invest in OpenAI, they might do it in piecemeal, which, to be honest, was always the deal. The original deal was 10 gigawatts for $100 billion. Every gigawatt was going to be $10 billion each. That was, my understanding of the deal in the first place. But Nvidia essentially said, hey, you know what? We're don't use the word commitment too strongly. Now it seems to be cooling off. Sam Altman said some nice things about Nvidia and how they're going to be long-term customers. And Nvidia said that they're very excited to invest in OpenAI. And people are trying to calm down these two relationships. But it didn't help but spook the market. And I tweeted about this earlier, but I think it's very brave of Sam Altman to essentially do anything to upset Jensen, when really he can talk all the crap he wants about the chips, but there's not another alternative, and they have by far the best product in the market. And essentially, Nvidia is a kingmaker to who buys their products. So Sam Altman just stepped up against, an operator of the largest technology company running same founder for 30 plus years, and you want to fight this guy that's like, don't worry about him being a wartime CEO now. I mean, you're not the first person to get in an argument with Jensen Wong. No one survived against him. Okay. What's up with Hood? Dude, this is crazy too. So this is the interesting thing. Hood, also selling off. This is selling off, at least to my understanding. Bitcoin's down 4.8%, right? We're having some broad crypto-like sell-offs. But the interesting part is that whenever you look over the last couple of days, like let's look at Coinbase over the last 5 days, sort of down 16% or so. Hood, down 18% over the last 5 days, and yet not fully concentrated on cryptocurrency. So one is 100% tied to cryptocurrency. The other one's about 30% tied to cryptocurrency, and yet Hood is selling off more than Coinbase. I find that very interesting. So I'm definitely going to look to Hood as being one of those names that I could accumulate shares of. That $85 range has been floated a lot, and now we're getting there. I think what people do often is that they will say, oh, if this company gets to, this valuation, I'm going to look to heavily buy. And then whenever that company does get to that valuation, then people go, oh, well, I'm going to wait till it hits 75. I'm going to wait till it hits 65. And they constantly, change that target. And then by the time that the market actually does turn around, potentially they have not started their position. They've actually missed the bottom. Or if they start to see a green candle, they say, oh, you know what? It's going to turn back around. So I can actually, get an even better dip. Like this is not the actual reversal. The reversal comes later, and then the days start to continue to stack on those green candles, and the price gets away from them, and then they've missed their opportunity. So I'm going to look to add Robinhood on the way down. I think it's a phenomenal company. They're about to grow on by far the best, they're about to grow on the best year over year comp that they've ever seen by little over 30%. The market might not be super strong in Q1, and obviously that will reflect in their earnings, unlike other companies that are doing more B2B sales and stuff like this. Robinhood is like their financials are directly tied to market performance, but still, we have to pick the winners, right? The winners will continue to win. PayPal, although there's a deal and the company's down 20%, there is a concern that, hey, if the execution isn't there, even in good times, the stock's not going to turn around, right? Because the performance of the company can get worse and worse and worse. One of the analysts' earnings calls was literally, or questions in the earnings call was, will you look to start to divest away from assets and essentially like stop calling this a growth company? You're essentially a company that is doomed to fail. And are you going to try to just aim to get as many dollars back for shareholders as possible? When those questions start getting posed, you have some serious fears in the market. All right. Thoughts on Microsoft? I like Microsoft. I've been an accumulator of Microsoft ever since the earnings. That 12% dip was, a good place to buy. What's my SoFi average? I think I've gotten my average up to about $11 now, maybe just slightly below 11. I'd have to check. But yeah, it's continued to climb up as I've continued to add to these types of prices. Okay. Hood is very dependent on crypto performance. Yeah, I know, but so is Coinbase, and that's what I'm saying. There's a little, maybe more hate on Robinhood than there is on some of the other crypto adjacent companies, right? Not as much as like a BMNR or something like this, but Sean Farrell was right. Like, honestly, he said Ethereum in the first half, this is Fundstrat's, crypto advisor or whatever. I don't know his exact title. We'd have to look it up. But he essentially said Ethereum's going to go down to roughly 2,000, 1,800 in first half of 2021. He said this whenever Ethereum was roughly about $3,400, $3,400. And everyone, including myself, was like, what are you talking about? Even Tom Lee said, he's on his own thing. Like we don't agree with that assessment at all. Tom Lee literally just reiterated that he believes that the bottom for Ethereum is 2,400. And that came and went. He thought at the end of January that we would be at all-time highs. The interesting part about Sean Farrell's call for the $2,000 to $1,800 price on Ethereum is that he also called in that same exact period, like whenever he put out that note to customers, is that Ethereum and Bitcoin would test all-time highs again at the end of 2026. So if he's right, then potentially we end up getting down to 2,000, 1,800, but we have something to look forward to in 2026, if you even believe in any of this speculative price action calling, which I have a very hard time believing in. But Sean Farrell has since said, no, actually, I do not agree with the 2,000, 1,800. Some people believe that Tom Lee essentially like nudged him on the back and said like, hey, you're hurting my BM&R gains. Like, you keep this up, you're not going to have a job. So, believe in the controversies, don't believe in the controversies, but it does look like we're heading lower and Ethereum's getting absolutely killed. So Tom Lee over and over is wrong on the price targets, and it's hard to believe going forward if he says, hey, you know what, I think we're actually going to, test new highs, or this is the bottom. How could you even possibly believe him after being wrong 4 or 5 times in a row? Even though directionally speaking, Tom Lee's had a very long history on Wall Street, and he's been way more right than he's been wrong. But right now, he's been wrong, and that's a bad look. Yes, if you believe in the 4-year cycle, it was an easy call for sure. You're right. But the 4-year cycle, if I'm not mistaken, calls for essentially a bad year, 364 days. And we're kind of in the middle of that. So the 4-year cycle would still call for a continuous sort of drawdown or, stagnant pricing. I think the hope was that Ethereum, because of the broad institutional demand, would break away from that 4-year cycle. Because why would it have a 4-year cycle whenever there is no halving? There is not, it's not tied to Bitcoin. Right now, the ratio for Bitcoin to Ethereum are very much tied, but there's nothing actually tying them. There's not a fundamental tying, it's more of a sentiment. So Bitcoin should have a 4-year cycle, but why does Ethereum need that 4-year cycle? Right? Yeah. Yeah, I completely agree. I'm getting called by my brother. You're getting silenced. Call me later. Erwin's in chat. So, ladies and gentlemen, I just went to Amit's New York City meetup and got to meet a lot of you guys. I saw Staples here in chat earlier. I was hanging out with him. Erwin, there was a bunch of you guys there. Michelle, and it was phenomenal. Okay. I just want to say, Erwin makes me feel self-conscious about my height, my health. It's so funny whenever somebody that is absolutely huge, okay? So he's got muscles popping out of everywhere, and he comes up to me, he's like, hey man, you're looking big. And I was like, dude, shut up. You're not making me feel good at all. You look huge. So Erwin, awesome meeting you. You were fantastic, but also you make me feel self-conscious about my my whole entire existence. And the bro's a literal giant. You're right. Ray was amazing too. I was partying with Ray. So also Ray was telling me he's like a literal marathon runner. It's phenomenal. Show him your legs. Dude, he saw the legs. He was not impressed. Going back though to the actual market here. When there's blood in the streets, buy property, right? So you can be a believer that you can end up getting lower and lower prices here, and that might be true. I'm not calling for otherwise, but there is amazing deals in this market, specifically in software names, and what we're end up seeing. Like I said, there's two different types of businesses: companies that are missing on earnings and then getting obliterated, PayPal. And then there's companies who are beating earnings largely and then still getting sold off. ServiceNow, SoFi, pretty much any of the software names that have recently just shown off earnings. Those names I would look to accumulate, right? It's hard to because they're constantly falling. And I mean, ServiceNow is so hard to potentially buy. I mean, maybe it's not, but whenever you look at the trend here, in the last year, we're down 47%. Okay, 47%. These are not small numbers. That's unbelievable. That's a huge drop. That could be time to accumulate, considering that they continue to beat on earnings. Now, revenue growth is slowing. Doesn't mean that revenue is not slowing, but the growth is slowing. So we used to be putting up 40% digits. Now we're getting closer to 20%, which is, not too long ago, Salesforce was at 20%, now doing single digits. So there's a rotation that can potentially happen. Then you look at Palantir, and they're accelerating growth rates and potentially looking to get into the triple digits level of growth, which could justify all the premium if they end up putting up those large numbers. Yeah, Shift 4 is getting obliterated. I think that there's a large belief that this is not just a PayPal concern, but a payments concern altogether. But even then, this was not a, over the last year, Shift 4, which does align very well with their recent high. Honestly, if you look back even further, it's not that much of a sell-off. But just specifically on that 1-year target, they're down 56%. That's so brutal. Today, down another 9.8%. This is a point of sale terminal business. By the way, it's not just Shift 4. The whole industry is getting sold off. Toast down 9.2%. This company over the last year down another 29%. And at one point, it was at $50. So $50 now down to $28. That's a massive sell-off. It's not as big as Shift 4, but they were still down 40% from their highs. It is incredible. And 52-week highs. Their historical highs are even much bigger than that. Toast is toast. That's funny. But yeah, Shift 4, I mean, I'm not even adding to this name because I do think that there's just safe names that I can accumulate in that, like, I just feel a little bit more comfortable. Like, although I do believe in Shift 4, I feel so safe in a Meta, in a Google. Google I'm not accumulating because they're at all-time highs. But they might even be able to maintain those all-time highs because, the SpaceX XAI merger, they have like 8% of all of SpaceX shares. And then if that ends up getting into Tesla, then they have a massive share in, this now combined massive conglomerate of Elon Musk's businesses. It's a great place for Elon or for Google to be in. That'll be a spike in EPS. The D-Local dip is crazy too. That's another one. All these payment names are getting sold off on what? On what? A company with bad execution ended up showing off bad numbers? Yeah, that's what they do. So here's the thing. eToro's down. Okay. In this market, let's see a poll. Do you guys look to buy eToro? And I'm going to bias the chat really quickly. So I'm you know what? I don't even need to pull it because I'm going to drastically impact how the poll goes here. This is not the company that you buy here. Yes, there could be a massive swing in terms of their where the company is versus where you could end up purchasing the company in the future. But Hood is also seeing massive sell-offs, and I think this is the time to pick the winners, the companies that, after everything and potential consolidation and large merger and acquisitions and big changes in the industry, this is where you pick the winners at good prices. So Charlie Munger, once said, it's better to buy what's the exact quote? It's better to buy an excellent company at a fair price than a fair company at an excellent price. I think eToro is a fair company at an excellent price. I think Robinhood is an excellent company at a fair price. Look at D-Local on absolutely no volume. This company the candles get me so excited, but really there's no money coming in. But still exciting. For real, I mean, at a $3 billion... actually, never mind. I was like, for real, this could be you guys. But no, that's not... Okay, let's go ahead and see the Mag 7 names. Oh my gosh, Tesla was the only one that was green here. Now they're actually not. Everything. Apple's still being looked at, maybe one of the more value names of the Mag 7. Even this is down. What is the QQQs looking like right now? Oh my gosh, man. I mean, for real, I look to a sort of 10% down on the markets as being like a very bad day. Under 1%, you're like, hey, red days come around all the time. 1%, or that would be sort of in like the 0.1 to 0.9%. You're like, yeah, I mean, anything can happen. More than 1%, you're like, okay, this is a bad day. More than 2%, for real, sorry. 3 and 4%, once you start getting around there, you're like, okay, I mean, we're like, war is happening. Why are you comparing PayPal and eToro? Well, I think that they're businesses that are in industries that are quite exciting, but they might be the underperformers of those industries. So it might not be the closest relationship, but hey, my stream. I get to decide. But eToro I look at as sort of like a value name in a very interesting space. I was looking at PayPal before as a similar sort of thing, except they're just such an underperformer. And, they're back into a transition year. So like, I don't want to get into that name. And like we did a transition year with Alex Chris. I don't want to do another transition year with Enrique Lores. I think I got that name right. Check ETH. Oh gosh. 21.33 down 9%. Does Sean Farrell get his goal price here today? Do we get to 2,000? By the way, guys, this is the time, and I think these are the moments, to remind you guys to, like, if you have to step away from your phone, if you have to step away from the stream, if you're really, really, really getting scared, either your risk tolerance is way too high, you need to potentially reduce the level of plays that you have on short-dated options and these sort of things that can really, impact how much of a loss this is for you. I talk about the fact that I don't buy options and everything. I sell options. I'd rather be the casino than play in the casino. But during these moments, the reason why I'm not freaking out is that I have, like, hopefully a long time horizon, God willing that I have good health and everything like this. But if I have to step away for a little bit and I'm holding on to companies that I know are growing, like, that's going to be better for my portfolio if I don't try to play around too much. Okay. So I'm not looking to move too quickly in these types of markets. I'm looking to, okay, well, what are the dips that are just a little bit more dippier than others and I can accumulate during these extremely red days? So if there's anything that I can sort of give to you guys, honestly, because I'm no oracle of price action or anything like this, it's just some level of calmness during this insanity. That even if things start to look more in correction territory, bear market territory, that I promise you there will be bull markets again. Okay? Let's relax. BMNR is cheap. So I hold BMNR. I'm taking it right on the chin, but honestly, I do not think that this is one of those times to go super heavy into more speculative names. Now, if you don't own BMNR at all and you're looking to get into Ethereum and you've always sort of were interested in the play on Ethereum, it might be an interesting name, but if you said, okay, you know what, I'm not going to get above 2%, 5% of my portfolio, something small, which is what I hope it is for you guys, risk adjusted, that, like, you don't end up pushing this to too much of your portfolio. It can get worse from here. I know it feels like it can't, but things can stay irrational longer than you can stay solvent. So just keep a good head out there. Anyone got clean underwear? Okay, bro, relax. Netflix, someone said. Is this how I spell? Oh my gosh. It's literally 4 letters. Netflix down to $80. Is it going to fall below 80? Are we going to get a 70 handle on Netflix? To me, Netflix is like a defensive name. Like, am I wrong? Like, honestly, whenever I look to, okay, even imagine people are worried about war and recession. You know what doesn't? Like, people are still going to go shop. Walmart's fine. McDonald's is fine. And Netflix is still fine. People are not that budget conscious where they're going to go cancel Netflix and only watch YouTube with ads. Like, they're still going to watch their movies. They're just not going to go out to a movie and, go to fine dining. But they still have to eat. They eat out. They still like, experiences. They're just not the greatest experiences. I don't know. Netflix is still a very good business, in my opinion. Now, this says BMNR. There's better stocks to add than BMNR. I agree. But if you do believe in the Ethereum name, I'm not going to, this is a historic sell-off. And the idea that, we've hit the highs on Ethereum, I don't believe at all. I think there will be much, much bigger prices in Ethereum going forward. Shopify is crazy. So if you guys don't know, Shopify is the second biggest position in my portfolio. This is the one where I'm like, okay, I need to step away. This is so much money to me. You guys have no idea. SoFi can go nothing in what's happening to SoFi right now puts any dent into my downside right now on Shopify. Luckily, I've got a great cost basis and been in this name for years and years and years and years. But this freaking sucks. Now, of course, the idea is that, AI is going to get so good that companies are essentially going to be able to code their own backend software, and they're not going to need Shopify. I'm a head over heels investor for Toby Lutke and Harley Finkelstein, and I think that they are honestly going to enable not one or two, customers to have, or one or two, founders to have artificial intelligence and try to make a base 44 or cursor or something like this. I think they're going to enable all of their employees to be essentially AI native, fast moving engineers. And so the products that we see from Shopify today, I don't think are going to look like the products that we're going to see from Shopify 5 years from now. And I think that that's the hard thing that the market is having to go through right now is they're saying, hey, in the future, AI is going to replicate what Shopify is doing. But I don't think the market is giving enough credit to say, okay, well, what is Shopify? What is ServiceNow? What is, all of these companies going to be able to offer whenever they take their thousands of employees and also make them, be able to actually try to tackle challenges that they just couldn't back in the day. Amazon, that's another good name. The interesting part about Amazon that I love so much is like, no matter how much artificial intelligence or something like this, you're not going to be able to replicate how many warehouses they have around the world. Like you can't, even with unlimited amount of money, you cannot replicate what they're doing in less than a decade. Like, so they have probably one of the largest moats, I think, out of any other company in the entire world. And I mean that for real. So as we get more full self-driving, better agentic models, like legitimately, every single AI and physical AI advancements that we end up seeing, I think benefit Amazon even further. So I think they're the greatest company right now in terms of just easiest purchases, like the easiest sleep, stress-free investments in the growth investing space. Because okay, agentic commerce starts to pick up. Amazon's right there. More cloud compute competing with neo clouds and all of this stuff. AWS is the biggest provider in the world. Full self-driving ends up coming. Hey, they've got one of the greatest, last mile delivery services. We end up seeing robots to help with logistics and packaging and everything like this. Who knew Amazon was also the biggest package delivery or logistics company in the world that's going to help with robots, right? At every turn, I think Amazon's a big beneficiary of what's happening, including in cryptocurrency, helping with the prices and the take rates for their payments on Amazon.com. At every turn, I think that they're a beneficiary. So I love Amazon here. Yeah, but also that type of strength, is also what's stopping them from seeing a large sell-off. So if you're looking for a large sell-off, you're not going to find it in Amazon, because what I'm telling you is not even like the market understands this. So we're seeing them down 1%, where you see a ServiceNow down over the last year 48%. The chat's in the way a little bit, but very different. Be happy your stocks are crashing. I don't know if or rolling your positions into leaps and calls. I don't know if that's the advice. Like, things can stay messier for longer, but yeah, it's okay to definitely take some risk, especially the lower we go, especially if you don't believe that some of these companies are going to go bankrupt, that there is a potential to take more risk, but maybe that's not the safest advice. But yeah, people could definitely look that way. Top 5: Nvidia, SoFi, Rubrik, Amazon, Google. I can't tell you how much I love your portfolio. That's phenomenal. I love those picks right there. That's great. And I think in these types of markets, you just want to buy the names that are winning and hang on for dear life. Okay. Let's go see what SoFi's up to. Last I checked, they were below 22. Oh gosh, they're going to be below 21, dude. Oh my gosh. On unbelievable guidance. What part of artificial intelligence and robots and full self-driving makes anyone worried about personal loans? Like, what are we talking about here? You know, the one thing I do like about financials in this market, as we find lower lows right now, is like no amount of coding can replace capital. The banks are in such a great position because, like, you're not going to out innovate just having billions and billions of dollars. You know, so hey, if it sinks, I'm going to buy more. Crazy though. I will check the QQQs out in a second, but SoFi is literally bleeding in front of our eyes. We're about to fall below 21. It's over. We'll just be broke. Yeah. When in doubt, zoom out. For real. People need to remember that this game is actually biased in our favor. Okay? There's always times of correction. That part no one guaranteed for you. The sort of closer to guarantee is that in a 10-year time frame in the markets, not individual equities, companies can go to zero. Many don't without debt or something like this. Like, if you're holding onto a company with a big fat cash stack and they have a technology business and they're selling, services to customers like Robinhood, for example, the chance of them going bankrupt is almost near zero. So understand that. Companies don't go bankrupt without debt. Now, what's it called? What was I going to say on SoFi and everything? Yeah, the guidance that they just ended up putting out for 30+% growths over the next 3+ years, that compounded annual growth rate is going to take their revenue, which, by the way, they've never missed, and this is not their first rodeo. Okay, we've been through 2020 with them in the pandemic, the moratorium for student loans, 2022, which is a big, sort of tech sell-off and largest increase in ramp for, interest rates, which impacted banks and, SoFi in that business as well. So this is not new to them, and they even beat on earnings all the way through then. But they're calling for their $3.6 billion in revenue to be $8 billion at the end of 2028. I don't know. You can sell that off, but I'm going to hold comfortably. The leveraged ETF on SoFi is worth watching? No. I can comfortably say that the leveraged ETF talk needs to actually stop. Like, unless you're like for traders and everything like this, use those tools to your advantage or whatever like this. But long-term holding of these 2X funds needs to stop for real. They literally decay over time. They're not actually 2X. Like, they're really, really bad for you. Be careful with those. I'd rather you literally do like leaps or something like this rather than there's so many other ways to get like proper leverage than to buy the 2X or 3X, 5X leveraged ETFs. I only use leveraged ETFs in options with margin, please. Yeah. Tanner, check mine. Meta, Shopify, Palantir, BM&R, Hood. I mean, yeah, pretty good. The only one that scares me is BM&R being so big if it's a top 5 holding. But yeah, I like every other name. Best buys right now, I don't know if there's I think there's this is another thing that I find hard with markets. Whenever we see this super broad-based sell-off, there's so many good deals. Right? And it's hard to diversify, especially whenever there's these sell-offs that you feel like you have 5 minutes to make a decision. You don't. You have time to make a decision, okay? It's better to get it right and to pick a name that is going to be here for the long term and can survive than it is to potentially trying to bottom tick a specific candle into a name that you maybe half know, that you don't fully understand the risks of. Okay, so remember, you got time. Do your own due diligence. Do research into these names, but potentially look to to buy into this weakness, not in earnings, but in price action. Because the companies that are showing beats on earnings but are showing weakness in their stocks will be some of the best buys that like those are going to be the deals. We're effed. Yeah. Yeah. I'm only at 10. So I believe that the real science for me is 14 names. However, I'm a little over that. I'm at 18 names right now. But there was some research from Bill Ackman's company, Perishing Square Capital, that put out a study that 14 names is actually probably as sufficient of enough diversification to protect you on the downside while still capturing upside. This year will shake out weak hands. It's your goal to remain, diamond hands a little bit into good names. I'm not talking about diamond handsing like PayPal or something like this. Like if a company ends up showing off weakness and they surprised you to the downside, it might be time to get out, bro. Like it's okay to take losses. Okay. What it's not okay for you to do is say, hey, you know what? I've lost money in this name, so I'm going to hold on. And like if it goes down to zero, I've already made a bad decision because you might be down 40% or something like this. Like, bro, no. Like you have 60% of your position left. Put that into a name that you actually believe in. It like, you didn't have the transparency or something like this that an Alex Chris did. He just blatantly lied to our faces about how good the company was and how great of a position and everything like this. And then, next quarter, we come to find out, oh, wait, no, everything's in crap. We're going into, he called this a growth company, and they're showing negative EPS and negative growth for next year. That's just straight up like the messaging to where we are, completely disconnected. Don't buy those names. Okay? But for, I don't know, some of these software names that I think are getting overly sold off, like even some of these mega cap names like Microsoft. It's like, do we think this company's going to zero? Do we think Nvidia right now, maybe not the biggest sell-off, but probably still way undervalued, deserves to be sold off 4% here on them about to, get the licensing deals to China, to sell H200s to ByteDance, Alibaba. What was the other one? Was it Tencent? DeepSeek? That was it. The DeepSeek. By the way, how funny is it that DeepSeek was like, back in the day, they're like, hey, we created DeepSeek R1. And by the way, we did it with $6 million in no Nvidia chips. You don't need good chips in order to make good models. The whole market freaked out, sold everything off. And then they were the first customer in line in China to be like, oh, we'll buy 200,000 H200s. Like, they all are lying through their teeth. And they know, even Sam Altman, oh, dude, Nvidia can't keep up with the how good of a product that we need to be and that we're diversifying away from Nvidia. Yet they're selling every single one of their chips and they can't get enough demand from their suppliers like TSMC in order to increase their sales. Like it's like the market's telling or the market's trying to deceive you and say Nvidia is not the only player and that they like their product does not have a significant advantage, but then their customer actual purchases say a completely different thing. Let's go ahead and take a look at the triple Qs, down 2.2%. It's worsening as the day goes on. It's one of those days, guys. This is terrible. Yeah, and Parsival, this is also true. And not only this, I think there was even talk of them being, smuggled Blackwell chips, even if I'm not mistaken, that they had like the top of the line chips. Maybe it was Hopper. Maybe I have my timelines wrong. But yeah. Top positions, Tesla, Palantir, Meta, SoFi, Nvidia. I mean, it's hard to go wrong with that type of portfolio. You can sit here comfortably knowing like, yeah, the market's selling off, but I have, you're paying for the most expensive names, but they'll win. Okay. Yeah, I completely agree with this. It's just profit taking. Earnings are good. It'll bounce back. There might be some worries. We need to check on the news to make sure that this Iranian situation is not getting worse. But if it does, it's not like, we can do anything about it. I mean, unless you guys work for, the military or something. I mean, talk to Trump. Like, no, I'm kidding. But we can only control the things that we can control. So I wouldn't worry too much about the market here taking profits. The things that we can control is investing in companies that are showing good earnings, and so far earnings have been fantastic. Okay. Thoughts on Zeta? Unfortunately, I don't have many thoughts on Zeta. We can take a look here, down 8.9%. It's tough. That's tough. I had to listen to Davis at the event tell me, that he's disappointed that I'm not in the name. It was like the only thing that we talked about. Every time that I looked over in his direction, he was like, but why won't you buy Zeta? Man, I'm trying to find a lot of names here. I know that Zeta is really in vogue with this community, but I like other names right now. Okay. Let's check the SPY, which I don't believe will be down as much as the QQQs, just because it's very heavily tech based. 1.4%. We have a little bit more defensive names. Let's see which names are actually working right now. Energy Fuels up 11% still, but even these names are starting to come down. Rocket Mortgages, ASTS, Palantir showed off unbelievable earnings, and even then it's sort of getting sold off. At one point in the after hours, got to 167 roughly, now sitting at 157. Even this name can't catch a break after showing off. I mean, literally maybe one of the greatest quarters of any company I've ever seen in my life. Okay. Gold up 5.5%. Where is silver? That makes me oh, wait, it's right there. 4.3%. Open Door up 3.8%. Bloom Energy, Rocket Lab. We're seeing Open Door up, rocket companies up, but SoFi's down, even though they just said that they're going to be making a massive push into home loans and everything. We're seeing like a big divergence, like rocket companies up 10%. Anyway. TerraWolf, Canopy Growth Corporation's up. Kratos Defense and a lot of space names. Walmart up 2.5%, still above $1 trillion market cap that they broke today. That's unbelievable. They hit new all-time highs today. Okay. Coca-Cola's up. Very defensive names. QXO, SMR, Starbucks, Target, Honeywell. These are some defensive plays. Home Depot, Schrenier LNG, right? Where's VG? That makes me think of VG. VG's also up 1.4%. Very interesting. Okay. Do chat. Is this guy against owning PayPal? I'm a little against owning companies that fail to execute. Like that is, it's, stocks that the price differs from the actual performance. I have a very easy time buying. Whenever the stock goes down, but also the earnings go down and the expectations miss and everything like this, those are bad. I don't like those types of signs. Now, is it overblown? Maybe. Like, do I think that this was a 20% miss? No, but I think what it ended up showing is that this is not a company that is slowly growing. And so like, hey, the buybacks will take us to the promised land. What I think this ended up highlighting is like, okay, give this company enough time, earnings will go to that's the problem with negative revenue is like over time, okay, does their market share erode from Apple Pay and from Stripe and Shop Pay and Google and even now SoFi and all of these companies are getting into international payments, lowering the total cost of payments, and people might end up switching away from PayPal. So I'm just not in a rush to buy names that are in big, deep, like maybe deep value territory, but are also potentially losing market share. That's not the way that I invest. I consider myself a growth investor. And so I'm looking for more of the payment names that are actually growing. Okay, let's see here. Supposedly I got, okay. There we go. All right. Let's look at monthly. PayPal is a failing. Yeah, I mean, it doesn't look great. If we actually even go all the way back, since this company has IPO'd, they're roughly up 10%. Isn't that crazy? This is since they've been a public company, going all the way back to July of 2025. They're up 10% right now. Yuck. Okay. Galaxy Digital is another one that's getting absolutely sold off because of their holdings in, because their holdings in Bitcoin, where they took like a $480 million loss on their holdings. But who knows? I know a lot of smart people that are potentially looking to buy into this name. Mag Sevens, Microsoft down 3, Nvidia down 3.8. Sorry, yeah, essentially 3.8%. Nvidia is the biggest loser of today, even though the neo clouds are some of the only green companies. TeraWulf, Bloom Energy, like who do you think these companies are supplying products to? You're betting on Bloom Energy, but not betting on Nvidia. Who do you think is creating this market for these companies to thrive in? I don't know. Okay. Musk should buy PayPal. I mean, I don't know if he cares to. Why would he? On the compound today, they said that BM&R could go bust if we enter a bear market, which we are entering. I'm 85% cash. I mean, it's a good place to be in cash, but why? How could they go bankrupt? They have no leverage. They have cash in Ethereum, and like 7 employees. I'm sorry, but I don't know. I don't care what the compound is saying. That's not how you go bankrupt. Okay. I mean, yeah, they can keep going down. I'm not saying that doesn't happen. Ethereum could continue to fall, but that doesn't mean that you can like the company has to close. Okay. UNH is good. So for me, I'm a tech, almost exclusively a tech investor. I like growth companies. UNH might be an amazing buy, but I unfortunately don't have an opinion on those types of names. UNH or even like even tech adjacent healthcare companies. I don't have an opinion on like Oscar or Hims or any of these names like that. I just don't follow the industry. I like knowing all the companies in a certain space. So I like the semiconductor names. I like, a lot of the SaaS names. I like a lot of this stuff. Shopify, is this getting worse? I like fintech and finance businesses as well. Almost 11% down on Shopify. I'm going to actually, you can't open your account on days like today. I don't even want to see. Okay. AMD earnings tonight, right? AMD and SMCI. I think AMD is going to do good. I have zero reason to believe that we're going to miss on AMD. Yeah, and Ethereum. Yeah, 100%. Mayo's correct here. Ethereum also has staking. They're going to be more profitable than not. Okay. It's not a good day to report. I agree, but it's not like they're going to change it. Um, 10-year yields are down. Okay, let's see if there's any broader news right now. I know the drone strike thing that we ended up seeing, not drone strike, I should say. An Iranian drone was shot out of the sky by U.S. U.S. aircraft carrier. Okay. Not seeing too much. Let's check on CNBC right now, see if there's any potential live updates. Now they're talking about Google, which is still an exciting name, but versus the rest of the big tech, not really seeing the dips that we're seeing in the other names. And maybe that's because of the XAI, SpaceX deal that they're going to see a big boost from. Maybe this is because, they do have one of the frontier models, Gemini. And so if more of the world is going towards artificial intelligence, and that's scaring people out of other SaaS names, that's not scaring them out of Google. But it's just such a crazy divergence from being like, oh, Google is dead because of ChatGPT to no, Google is one of the only surviving names because of Gemini. That's a crazy mix. Okay. From MSN, French prosecutors summon Elon Musk after cybercrime units raid ex-Paris office amid investigations into algorithm abuse and AI misuse. I heard about the raids, but I didn't know that anything came of it. Yeah, Tom Lee did say that like 2,400 was going to be the bottom, and then, here we go. It's already below that. Let's check QQQs. 612. 2.2%. It's one of those very bad days. The White House just posted, the golden age is here. Siemens Energy is investing a whopping $1 billion in America, creating jobs and expanding across the country. 1 billion? No, I mean, that is exciting, but a whopping 1 billion is kind of funny. We were doing, weren't we doing like trillions of dollars with like, the Saudis and everything? The numbers have shrunk for the golden age as the markets are down 2.2%. Okay. Billionaire Ken Griffin just said that he'd be open at some point to running for public office. Great, that's going to pump markets. The literal market maker is wanting to run public office. Okay. Let's see. Walmart, first $1 trillion retail company. Yeah, I mean, what do you count Amazon as? I guess they're not fully retail, but like they are definitely in that space. Yeah, if you're going shopping today, this is the way you should look at it. You're getting the same great products that you like, just at a discount. Now, the only thing that I would preface this with is that there are some companies like Robinhood, now down to 85.22, that like as the market sells off and there's potential less retail participation, this can actually impact the amount of what do you call it? Like actual revenue that they make, right? They're going to make money on the amount of customer assets under management that they have, or assets under administration. They're going to make money on the amount of volume that ends up trading, the more gambling that happens on options. And if this sell-off is quick, then there will be a lot of, overall options volume. The problem is if we have a long, drawn out, decline in markets, that retail usually ends up getting a little fatigued, and then they end up selling for losses. Right now, whenever we see these sudden 10+% drops, it's actually easy. We're kind of conditioned to say, hey, you know what? This is when you buy the dip. Okay. We can buy these dips because we know what we believe in and everything like this. The hard part for retail is then if tomorrow it's down 1%, then the next day it's down 1%. Or maybe over weeks, it's down another 1%, 5%, something like this. And we just see this long multi-month drawdown. Retail starts to get really scared because then they start forgetting what their original thesis was. They start questioning whether the companies that they believed in are still, still have the chutzpah, right? And then that really hurts. And then the trading volumes go down and people run out of cash, and then Hood gets, like then they really see a slowdown in their earnings. Yeah, killing me softly type thing. Exactly. Tanner, are you Jewish? I'm not Jewish, but I just realized as you said that chutzpah might be a. I'm allowed to say that, right? That's not like a bad thing to say. It's got that oomph. Just what came to mind. I'm going to say what I want. You guys figure it out. I'm Dutch. Well, I'm not even Dutch. I mean, my mom was Dutch. My dad's a mutt. He's from everywhere. So, yeah. Micron down 6%. Okay. I'm Jewish. You can say that. Thank you. Okay. Amazon versus Microsoft here, Tanner. I mean, I kind of like them both. I'm definitely buying Microsoft for the first time. But I mean, over the long term, I definitely like Amazon more. But at some point, this sell off on Microsoft is just a little too much, right? Like we're just discounting Azure's 38% growth. Like, get a hold of yourself. Dutchies, yeah, I am a Dutchie. Even though I can't speak a word of Dutch or really know much about the culture, I'm definitely I'm westernized for sure. My gold and silver are up. Yes, congratulations. I mean, they're not. I'm not looking to buy those types of things to rotate out here. Yeah, I know. SoFi is probably the one of the weirder names in terms of the sell off here. Down to $21, like on just phenomenal earnings, phenomenal everything. Tanner 51st Manson. Yeah. The amount of nicknames at a MITS meetup, like whenever I went there and everyone was calling me like, I don't know, Tantrum Tanner or Half Pipe Tanner or all this stuff, just like every nickname, Toilet Tanner, all the nicknames that you guys have given me throughout the years, I heard them all yesterday. It was unbelievable. Tanner Hawk. Yeah, I got Tanner Hawk for sure. From Danielle Blair. I see who's watching. What's up? Okay. What stops the bleeding? Well, we're in the midst of earnings season, which can be a great, a band-aid on this bleeding for sure. If we actually end up putting up great earnings, like sometimes it's a little bit of time heals all, but the numbers that we end up seeing are definitely good fix as well. Ned Flanders for sure. I definitely got less Ned Flanders this time around, but yeah, I like Ned Flanders. What might be one of my favorite nicknames. I made sure to keep the mustache thick for the meetup. CEO of Spy. Okay, relax. No, we'll be okay, guys. Let's check the Spy as well. 1.5%. Even the defensives might be losing their steam here a little bit. SpaceX takes on XAI's cash burn after merger. Let's see what CNBC is also talking about. Josh Brown was on to talk about some of the best stocks in the market. No one is even believing that. We need to talk about this meltdown here. But I don't know if anyone's really covering this right now. Like, really, I'm not even seeing... Okay, wait, let's see. No. Oh, okay. There's not too many things actually covering this sell-off. People are just sort of, wondering why this is happening. I can't find an actual reason other than the drone strike, which happened a while ago. Okay. Let's see. MU down 6.5%. 6.7 now. 407 SanDisk. Let's check some of the memory names here. They're only down 1%. At one point today, 725. Yeah, Michelle was amazing at the meetup. I was talking with her about Harry Potter for sure. It was awesome. Sorry, not drone strike. They striked a drone. U.S. aircraft carrier ended up taking out an Iranian drone that flew into their airspace. Well, into the Arabian Sea, but, anywhere where America is moving their ships becomes their space, okay? They get to decide what's their space. So a drone just went a little too close, and, America fly swatted it. That's what they did. Said, oops, sorry. But it was a drone, no loss of life. Like, nothing's too crazy yet, but people are still, worried that might escalate into, hey, pay for our drone back. That is so... Johnny Vick said Drone Powell. That's very funny, bro. I should mod you for that level of... That's phenomenal. Palantir. Is Palantir going red? 5.3. It is starting to lose a little steam, but it's been lower today, so we'll see. We will see. Okay. Let's check on crypto. Oh my gosh, man. Bitcoin fell below 73,000. Now starting to climb back up 73.5. Ethereum 2140, almost broke below 2100. We are not cooked, bro. Okay? Hood is fine. This is the time to remind yourselves what you're holding. For real, go back and listen to old earnings calls. Like, if you guys start to really freak out, remind yourselves what you're holding. And if you are holding crap, okay, if you're looking in and you're like, wow, I started to really get into like these really small cap names. I thought that these were momentum plays. Someone on Wall Street Bets told me to get into this. I don't really know what they do. Like, okay, for real, you might be cooked. Okay. Some people have been posting their top 5 holdings, and it's like, if you have some level of Mag 7 in your portfolio and bigger names, some defensive names, the dividend guys are not worried. Netflix, like this, I know it's not a Mag 7 name, but you're fine. Okay? I don't know if that's the best deal to be in. I'm not saying what's a better buy, Amazon versus Netflix or something like this. Like, there's always room to improve in terms of what are the best names to purchase whenever the market does start to turn around green. What are going to be the most explosive earnings over the next year? I'm not calling for Netflix, but whenever you're talking about like losing your shirt in this correction, you're going to be fine with Netflix. Oh, God. Jacob, Jacob Jason, you might not be fine. Top 5 holdings: PayPal, Duolingo, Fubo, BM&R, Shopify. I don't know if I've read. I want to say it's fine for you, bro, but honestly, it might be time for you to call up your banker and like say you might be cooked. Okay? And I'm so sorry to say this. I could never be like a nurse that has to deliver like insanely bad news to somebody. You know, the person that walks in and says like, you know what, this diagnosis is actually not good. And Jason, I think I just gave you that diagnosis. It's terminal. Your portfolio is terminal. Okay. Let's go check on the portfolio. I know, I of course he's lying, but it's a great example of what I would not want to be in right now. Shutdown ended? Did the shutdown actually end? Is this why we're seeing like huge green candles right now? Did the shutdown actually just end? Is it over? House passes government funding package to end partial shutdown. We're back, baby. No, we're still down 2.15%. But like, you know, now's the time. I am actually going to buy some stocks right now. Give me 1 second. I need to buy. Okay. I'm going to be buying names that have great earnings and are just going to be doing phenomenal. Okay. Oh, gosh. Okay. All good. Buy Ondas. Well, I can comfortably say I did not buy Ondas. The second Tanner buys, the government shuts down again. All right, now we watch the green. Now we enjoy. Whew. Okay. Jason's back from the dead. Yeah, how's this Fubo doing? Actually, you know what? He might not be back, bro. Even PayPal's returning. Okay. Let's check. SoFi 2119. D local 13. Nebius 86. Spy 686. And Hood 8558. Not WWW. What am I? Okay, 613 down 2%. We're still cooked, but now we're medium. It's not well done. Dude, yeah, we're still deep in the red. But, you know, I'm not seeing an actual reason for this sell-off. And, you know, we've got AMD earnings and SMCI, and I don't know how SMCI is going to do, but I've got a feeling that AMD is going to do well. Didn't see a change in, you know, TSMC earnings or just the amount of demand for chips, and every, you know, company is raising CapEx. So I think they're going to do well just from those signs. But yeah. Okay. Chipotle is giving away free food that goes with their Super Bowl ad. Walmart's OnePay adds AMC executive Patrick O'Connell as CFO. All right. Let's see what else is in the news. Visa CEO ended up talking about the proposed credit card fee caps and said that they would reduce credit card access, eliminate rewards, and stifle innovation. Consumers and small business would see reduced access to credit. Of course. Of course. Sam Altman just signaled deeper ties that they will remain a gigantic customer of Nvidia for years. How many times can I say, of course? Yeah, the overblown relationship between those two, Jensen and Sam, of course, we're going to be overblown. Let's see here. QQQ still under 2%, but can we break back above that 2% sell-off mark? Or is the market going to be still just a little hesitant? Okay. Let us charge what we want. Well, I think that honestly, that is a capitalist society. that if you want credit cards to come down, some company needs to innovate and offer a better solution than a JP Morgan card or something like this. Okay. Is a bounce for ants? So far, it's looking like a bounce for ants. Okay. Look at the amount of volume, though, too. Like whenever this shutdown happened, look at this. Crazy. What do you think of Affirm? I really like Affirm. I don't hold it right now, but I need to do a lot of work into Affirm. Like they look to be like a very serious fintech competitor. I mean, they're not even a small name. They're a big name, but still, I need to do more work for them or on them. AMD is primed to disappoint and drop like a rock. Well, if they do disappoint, I think they will drop a ton. I mean, that's definitely true. But just because they're not selling off as much as, some of the other software names here does not mean that they're primed to disappoint. Okay. Andy said, "What up, Tanner? Great seeing you on Sunday." Andy, thank you, man. It was great seeing everyone at the event. It was unbelievable. Okay. SoFi offered me 6.1% mortgage refinance. Hood and Sage is giving me 5.4%, significant difference with similar APRs. Yeah, I mean, then take Hood and Sage. But just because you got offered that rate does not mean that everyone is getting offered that rate for a SoFi loan, right? But for you, even if you're a Hood or a SoFi investor, it's not going to make any dent for you to take, don't just help out your company. Take the one that's a financially better opportunity for you. Okay. SoFi strict with their lending, which is good. Yeah. Buying more BM&R? No. Even down here, I'm not buying more. I don't want to get overweight in any sort of way in that position. I think that there's better names for me to buy. I think even buying Hood here is still a bet on Ethereum and crypto in general. And that's my sort of advantage, or that's my sort of play that I want to do. Buy great names. QQQ is climbing a little bit now, down 1.94%, a little above 2%, still a far way off. Okay. Momentum buy isn't here yet. No, I'm not much of a good trader. I wouldn't have followed me into my timing. Even though it's looking like it's doing all right now. But I'm really not seeing a reason for the sell-off in general. And I did see, you know, good news so far. So yeah, we'll see. We will see. Okay, VG, people are adding to VG. Let's have a look. Up 3.9%. Some of these good names are even rocketing up even higher on the shutdown ending news. SanDisk, quick turnaround here, 655 to 678. Lemonade, also $82, up 1.8%. Air Test Systems up 1.2%. Coca-Cola up 1. Wow. VIX cooling off a little bit here. Okay. Silver 5.9%. Actually bumping up on the shutdown ending news as well, interestingly enough. And which I guess makes sense, maybe, right? If there's more spending, then sort of the dollar devaluation theme continues, maybe. Maybe that's how they think of it. I could see that. Why does Lemonade keep going up? They keep making more money. Okay. Yes, the shutdown did end. House passes, House passes government funding package to end partial shutdown. That was the news. That's why we're seeing a little bit of a turnaround here. Yeah, partial shutdown. Yeah, we had a shutdown. Yeah. Trump's crashed the stock market a lot recently. I mean, yeah, he's had some pretty, some pretty concerning tweets that have scared markets. But on the other side, he's also had some good tweets that have also excited markets in the future as well. Yeah. Okay. Are you buying Oracle? No, not buying Oracle, but that's actually one of the larger tech names that I think I'm a little bit too spooked about. Just taking too much risk. Okay. The positive tweets don't seem to move markets much, only negatively. Well, yeah, I think for the most part, like through 2028, I don't need to worry about like extremely risky news, like a Chinese Taiwan invasion, something like this, that would like devastate markets. I do not think is going to happen at least through 2028. You know, because I know people are worried about TSM, but also TSM might be the reason why that invasion doesn't end up happening. It's almost like China would actually be impacted just as much, if not even greater. It's almost like as TSM has put it, like the silicon shield around Taiwan. It actually goes to benefit them. Iran might be a different story. I'm not saying that's not, but selling off again. Let's see the news here. Gosh, it's never a dull moment, eh? Too funny. Here we go. Buckle up. SoFi trying to recover. Now we head all the way back down. All right. Apple actually turning green today. Hit new highs for the day. Just a broad sell-off. I'm not seeing anything just yet. Let's see. Okay. OpenAI CEO Sam Altman said Monday he's concerned that the U.S. may no longer lead in open source AI, noting adoption is slower than expected. Intel CEO LBT added that informed sources believe China now leads the U.S. in this space. All right. I work for Microsoft. Am I cooked? You're all good. I do not hold any AMD. Okay, don't, for real, don't spam. Do not spam. Let's check the broader markets. Or actually, no, I want to check crypto. 2176 on ETH. BTC 74,700. QQQs. Okay. MSTR. I'm not really following MSTR, but yeah. New segment from Tanner. Am I cooked? Yeah. I actually really did like seeing your guys' top 5 holdings. That was really really cool. Just sending your portfolio. Am I cooked? You know what's funny? There were some people at the meetup that, like, for real, I met with this guy. I forget his name. It wasn't Pedro. But he ended up, or maybe it was Pedro. He ended up pulling out of his back pocket was his printed portfolio performance. And like that versus the S&P, and was just showing me. I was like, this guy's a legend. Like, he printed it out. Didn't want to show me on his phone, nothing like this. It was like all paper. The amount of portfolios that people brought, I was like, this is amazing. You saw that as well, Alan? It was, yeah, a ton of fun. Nvidia, Nebius. I mean, I don't have super opinions of half those names. What to do on days like today? Just wait for the bottom or try to accumulate good names regardless? Well, I think that you should, accumulate when you can, right? I sort of like the DCA in these moments, because I'm not great in the technical analysis side and stuff like this. So for me, I think it's very hard to know exactly where the bottom is. The technical charts hold up until they don't, and then they end up breaking trend, and then you're completely lost. So I like to just accumulate companies slowly and buy on days like today on names that I feel like are oversold. And I very much know, like today is not the type of day where I like to, buy into a new position, right? If I want to take advantage of the price action of today and just be like, okay, some of these names are down 10%, 9%, something like this, then they have to be names that I already hold. I'm deepening relationships in those names. It could even be at higher prices than my averages, right? But it's okay to go up in your total cost basis. One thing that I've always highlighted is, like, I always never really understood why people are like, oh, my average cost on this company is like 1/20th of where it is today. Like I'm up 2,000%. I'm like, what? You didn't believe in this company anywhere from now to 2,000% up? Like, yeah, okay, you got a really good price in this name. Why didn't you continue to buy on the way up? Like, so I like to buy companies on the way up. I've bought Nvidia at way higher prices than my initial purchase. And when I mean like the difference between $6 and $160, like massive difference in those prices, because I believed in the company back then and I believe in the company now. So, yeah, that's always really important. So on days like today, take advantage of companies that you already know that are on big dips. For me, that might be SoFi, Hood, Meta, that sort of stuff. Buy into companies that you believe are going to have strong earnings and continue to have strong earnings. Leaders in this space. Yeah, for some people, maybe that's Zeta. Maybe that's Nvidia. Maybe that's AppLovin or BM&R. But, you should consider new or Micron. See, I don't hold that position. I need to do research. I'm looking to buy companies that I already have, I already know the research on them. These days are going to happen. So like the freak out that they're happening, it doesn't weigh on my conscience at all. Okay, the market panics from time to time. Like read a history book on markets. They'll show you like, oh, like first time, like this has happened before. Take it in stride. This is our advantage. We end up getting better prices than if we were to have just climbed up to new highs and then stayed stagnant for months or something like this. This is better. It's better that we're having dips than staying stagnant whenever markets are unsure. Good day for some Peter Lynch quotes. Oh, yes, it is. Okay. What about our depression? For real, though, I don't know if you're being honest or playing around a little bit, but if you are being honest, markets can absolutely bring huge mental concerns. Okay. Maybe some of the older males in the chat are like, oh, he's talking about mental health. Kick this pussy out of here. No. But like, if you are having a really bad day on holding some names, one, either close your account, walk away, look at some of the names that you have really low conviction on that you're concerned about, and maybe it's time to trim and learn that lesson for next time, that you do not need to raise your risk tolerance in order to, well, I mean, maybe you do need to do that to get a better performance, but like the opposite is way worse. On down days, those riskier names turn into nightmares. So yeah. Okay. Yeah, get out and go outside. You know what's crazy is like, especially whenever markets are melting down like this, you can go outside and go talk to somebody that's not investing. They don't even know that like the day is even bad. Like even in like the 2008 crisis, like the markets, everyone's freaking out. And then you go step outside, you go to a coffee shop and people are like, yeah, no, I was just talking to Susan. She's still a little bit of a B word, but like life goes on. Time to step out for a second. It's too cold. It's pretty cold. Yeah. So we do our best. But these are good times to realize what your risk performance or your risk appetite is. You'll be around for round two. That's the important part of investing, right? It's not about making every dollar today. It's about winning the long game. Warren Buffett is not the best investor because he made a ton of money in 1 year. He was the best investor because he constantly outperformed over the longest lifetime of investing. Okay. This is a long game and people forget that. You don't need generational wealth tomorrow. You need generational wealth over, 20 years of investing. 30, 40, whatever. Yeah. I got people in here talking about TQQQs and everything. It's like you guys are taking the opposite of what I'm trying to say right now. Is crypto winter here yet? I mean, it feels like it. Does it not? ETH 2200? No, I'm not in Zeta. Duolingo below 120. But these are not the dips that I would look to buy. I think there's better dips than Duolingo. I think if you were to go and look at the website traffic growth and everything like this, like how much the actual activity on Duolingo is actually being seen, that there are real concerns. There's a reason why it's selling off. The market is not always just like, purely dumb. What are the concerns? Now, they can be panicked, but Duolingo, you got to be concerned from time to time. What do you think about the Reddit drop? So there were some channel checks on Reddit that ended up suggesting that, the amount of agencies that are working with Reddit to promote some of their ad campaigns is slowing. Now, the problem is that this has actually been a common theme with Reddit that's happened like a few times. And the beats on Reddit's numbers in terms of their revenue and EPS is so far out of expectations. They're not beating estimates by 1%, which is big comparatively to like Microsoft or some of these bigger names. They're beating revenue by like 5%, 15%. They're beating EPS by 50%, 80%. Like they're crushing estimates. So until I see that Wall Street even fully understands this name, I think that their channel checks are just not accurate. If Wall Street is so far off from their consensus to the numbers, it means that their opinions of this name are not that great compared to the actual numbers. You know what I mean? So I don't trust them to evaluate this name right now, and because it's potentially so new, too. I think they'll get it over time, but yeah. Okay. Let's see, QQQs. If you're in stock, just rest and walk away. I know it's the one thing I haven't done. I actually do need some rest. I don't even want to tell you guys, like, I haven't even checked my sleep score last night, but it's probably bad. Okay. 81. Yeah, that's what traveling does too, though. Sleep consistency, 78%. Hours needed, 71%. It's because of the travel. I just accumulated so much sleep debt. I need to go to bed. Whatever. Since when is 81 bad? Honestly, my average is right around, I'd say probably 91, 92. So 81 does suck, at least for me. But yeah. Okay. My sleep score is 41. Then you need to go to bed. you for real need to go to bed, dude. Okay. You need a surveillance tool to radar your sleep? What sick world are we living in? Well, you know what's so funny that you say that is that there's actually so many studies that we can't tell how good our sleep is. That it's almost like saying to people that if someone lived in isolation, would they even know that they are colorblind, for example? Like the only reason why people even remotely know that they are colorblind or blind in general is because other people have had different experiences versus them whenever they're talking about, color around them or something like this. The example I'm trying to bring up is that people who have under 6 hours of sleep per day usually it say that they are running fine, but they're not actually aware that their performance and their, you know, actual like athletic ability and you know, intelligence, ability to take exams and all this stuff, their performance goes way down. But you're not testing it every day, so you don't know that. Um, so yeah, I think that you do need to monitor your sleep because you don't have all the information to realize potentially how bad a performance you're actually having today. Okay. Let's see. Did you see the Hood announcement? What do you think it is? The flying, what is it called? Take Flight. Take Flight was the thing. I cannot put my finger on this one. Usually, you know what? Like yes, no. There's a couple ones that like just give it away so easily. But they said this is for their flagship products. Take Flight coordinates. I don't know, man. I'm not sure. So we'll see. But this is Robinhood. They continue to innovate. Market goes up, market goes down. They expand their total addressable market. You know, repeat that over 4 quarters. You're going to have a lot more total addressable markets and products that you're going after. And by the way, they're not just like putting out products willy nilly. They're putting out, you know, the best futures ladder, the best options products, the best credit card. They're putting up amazing banking products. Like they're just putting up amazing products that are not just looking to have new total addressable markets, but are actually capturing them, right? So we'll see what happens. But yeah, once again, SoFi actually, I'm just looking over at my screen. They're once again promoting their mortgage rates and everything. I'm telling you, they are pushing into mortgages really heavy right now. They're realizing they're not going to grow into a massive multi-$100 billion financial, you know, mega bank by just doing personal loans. They need the biggest lending product in the world, which is home loans. Flight points. You know what? You could be right. You could be right. Some sort of higher end, more affluent like product that like you could get flight rewards with your trading activity, with your banking experience, with your credit card experience. That could be interesting. Can you imagine trading and building flight points? Because, we will see. They just put up a Reddit post about their mortgages as well. Maybe they invested in Joby. One could hope. Yeah, I mean, maybe. I know that they offer some helicopter ride discounts and stuff like this for their more affluent customers on Robinhood banking. I think if you're a concierge member, which means that you have over $1 million in assets under management, you're an active user. So yeah. Hims House just sold their Ohio 503B facility in sale leaseback deal with LCN Capital Partners. Okay. People are saying it's bullish. I don't know anything about it. Hood needs to speed up issuing their credit cards. They are issuing their credit cards probably faster than any other financial institution has ever issued credit cards. The difference is that they essentially have so much, there's never been this much demand for a financial services like revolving credit product ever in history, right? There's never been, JP Morgan doesn't put out a card and see 3 million waitlisted cards. Like it does not happen. So they now have a bigger card program than SoFi, and SoFi has been doing this for years and years and years. So they are offering this way faster than anyone. but there's just such high demand. And then you got people in the chat that are rubbing it in that they have the credit card. Congrats. You know what's so funny is I went to one of the Hood events where they announced the credit card and they said, hey, and to everyone in this room right now, you guys immediately get access to the Robinhood credit card. And I was sitting in that room and I was like, I guess it's not to Canadians though. So I was the only person in that room that didn't actually get access to the card. For real, I was at the Robinhood Summit and Vlad goes, how many of you guys are Robinhood users? And everyone raised their hand. My hand was down. I was like, I mean, if you come to Canada, I'll be a Robinhood user. But right now, I'm just an observer. And I love what I see. Blame Canada. Yeah. Okay. When are they coming to Canada? So they ended up acquiring a company called WonderFi, which was a crypto business that ends up, or a Canadian crypto business. But I don't think that I've ever seen them talk about it since that original press release. Oh, wait. Oops. Okay. Kevin O'Leary trash? What's that? GTA 6 will come out before I get my Robinhood credit card? Yeah, maybe. Oh, sorry. I meant to put the chat back on screen. That was my bad. Okay. Canada won't let them. Well, I think they are coming, but yeah, they definitely have a lot more regulatory hurdles. It's not easy to come to Canada, but it is possible. I mean, companies have. The problem is that there's so many regulatory hurdles and it's costly, and there's, you need essentially 13 different licenses to go to the 13 different provinces in Canada, and then the total addressable market of that is smaller than California. It's like so much work for so little. All right. Okay. Canada's regulatory capture. I know. Yeah. So, by the way, we're back down 2.2%. This is gross, man. This is a bad day. This is not fun. Gosh. But we have a long-term vision, and we learn about risk appetite through these moments. Thoughts on cybersecurity? So the only ones that I'm actually looking at, Palo Alto might be a good one, but I haven't really taken a look at Zscaler. Rubrik looks very interesting. I really like CrowdStrike, and honestly, just over anything, if I were to pick one, it would just be CrowdStrike. Everything I've heard. So the industry is a little bit of a black box for me in terms of like separating the differences, and I mean product wise, not financials. Anyone can look at stocks like a math equation. That I don't think that stocks are just math equations. I don't think that they're just charting. I think that it's a mix of everything, right? And differentiating the differences between a Sentinel One and a CrowdStrike in terms of the performance is hard unless you're not in the industry. So that's what really scares me about the industry in general. But everyone I talk to that's in that industry, that's in IT, that's anywhere revolving cybersecurity, tells me there is no other CrowdStrike. They are the market leader. They own the entire space. There's nothing like it. So, yeah. Nvidia down 5%. No way, bro. What? What the heck? I need, here, one sec. Right now I'm wearing my Ethereum hat, which is the funniest hat to wear on a day like today. But now we gotta pour one out for Nvidia. Real one quick second. Okay. Solidarity, baby. I'm not freaking leaving. The AI boom is over. What? Who told you that, Raven? This market? These red candles told you that it was over? The software names are selling off saying that the market's not over. Like, how can they, I don't even understand how all of this can come together into one ideal consensus. It makes no sense to me. Memory, brand new highs, everything's skyrocketing. Like there's going to be so much need for memory in data centers for enterprise clients, but yet we sell off Microsoft and we sell off anything that OpenAI touches, even though they're creating a lot of this demand for the memory names. And then Nvidia sells off. Where do you think the memory is going to? Like, I don't even understand, man. And then I'm listening to this freaking, Thinking Machines book by Stephen Witt. Amazing book, by the way. If I can get anyone to purchase that book, I mean, give the author a little bit more money. This dude's put a lot of work into this book. But the way that he talks about how Jensen has put up these unbelievable predictions of the future, and then what he's predicting into the future going forward is that, like, not only are we going to have robots and agentic AI and all this stuff, he believes like buildings are going to be essentially robotic and agentic, almost like offices of the future will convert from offices to nightclubs as the nights move on. And like, it seems so unbelievably futuristic, but like Jensen's made these calls for 30 years. And now I just have to realize, like, to question this man is like, this is the wrong way to think about it. The future is going to be crazy. And I've never felt like a time in my life where the future has felt like right now. Like, it feels like right now. Any news on the crypto bill? Not that I've seen. Public just launched a public account manager skill on OpenClaw to let users trade stocks, options, and crypto through Public's APIs. That's cool. We're losing market. Instead of saying PayPal saying we're losing market share, say normalization of our long-standing market leadership position. Yeah, right. A normalization of our long-standing market. That's so funny. Okay. Do we need Nvidia earnings for tech to gap higher? Maybe, but I also think Nvidia earnings are going to be phenomenal. Like we saw all that CapEx growth from Microsoft, and even Meta ended up coming and saying, hey, you know what? We did 72 billion last year in CapEx. You know what we're planning on doing next year? Potentially 115 to 135 billion. And last time that they did this, the range was 60 to 65. They ended up at 72. Okay. If the range is 115 to 135, is there a possibility that we end at 140, 145? $1 billion of the purchase of property and equipment. And that purchase of property and equipment, by the way, is data centers. It's chips. It's Nvidia and AMD. And for many companies other than Meta, it's just purely Nvidia, Walmart making a run today. Yeah, defensive names people look to sort of shield themselves there. Okay. AMD is going to go up 20% in after hours, and we know this. I promise you, we do not know this. This guy's trying to pump his own bags. We do not know this, ladies and gentlemen. if you had no Nvidia, would you start a position here? Me? Yes. You? I don't know your timeline, your risk tolerance, if you're going to sleep comfortably, if you know anything about the product or their timelines or anything. Me? Yes. Okay. Just full ported in AMD. Thanks, man. Okay. Let's see. Recession is here. What data is pointing to that? Like, actually, I find this sell-off is like very interesting. We've seen that, maybe relationships with Iran are getting a little bit more tense. Not the first time. We're seeing, a government shutdown potentially get closer to, being a nothing burger. That's interesting. Okay. I mean, maybe this all has to do with Jensen Wong's inability to want to invest in OpenAI. Maybe OpenAI really was inflating this market. $1.4 trillion, $1.5 trillion to spend is a lot. And then this is what Jensen says.
Can I ask quickly about OpenAI again?
Sure.
So yesterday you said that the Nvidia is not going to invest as much as 100 billion in OpenAI.
No,
is that for the current run?
We never said we were going to invest $100 billion in one round. That never was said.
But how about the overall commitment? Because last September you and OpenAI
there was never a commitment. It was if they invited us to. So let's start over again. They invited us to invest up to $100 billion, and of course we were very happy and honored that they invited us. But we will invest one step at a time.
All right, but is that overall commitment still stands, or it's not a commitment?
I told you just now. Okay. Yeah, you keep putting words in my mouth. Okay. It's not.
Sorry about that.
Yeah. I know that. Yeah. They invited us to invest up to $100 billion, and we are honored that they invited us. We will consider each round one at a time. Yeah.
For real, talk to her like I talk to my dog. Yeah. Like a kindergartner. And I mean, in this space, we are all kindergartners around Jensen. So, but boy, oh boy, was he. Yeah. But I just told you, right? So you failed my class. Okay. He's the best. I don't know if there's a CEO that is better than Jensen Wong. And then whenever people sell off his company, I'm like, yeah, you guys do you. Like, it's not the first time that we've seen massive pullbacks in this company, only for every single person to be wrong always. Count the bodyguards around him. I mean, he literally might be one of the most important people on earth right now. Like you could probably say, like, in past, because of the boom in artificial intelligence, like a lot of the GDP growth was focused on artificial intelligence. Okay. This was single-handedly started by Jensen, and his company. But like, the reason why the world isn't in deep recession can largely be looked at from benefit from Nvidia. Like people don't really understand how much of an impression that he's had on the world. Elon Musk better. I mean, people say this, but like even the net worths don't even align. Like, people can look at Tesla and SpaceX and all of this stuff, and yeah, they're very exciting, but the multiples of the earnings of what those companies are doing are much, 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 much higher than Nvidia. Nvidia's actual earnings and customers and everything is a much larger impact on the overall world than Elon Musk is even remotely doing. He's launched a couple things into space and sold a lot of EVs. the customers of Jensen are entire countries. Are like, it's insane. Say commitment one more time. I dare you. I double dare you. That's funny. Nvidia's earnings are S&P 500. Like, yeah, it is. I mean, I'm not even speculating that Nvidia is more important than all of Elon's companies. You see it right in the price. All of Elon's companies put together are not worth 4 point something trillion. Like, you just see it in the valuation. Okay. Let's go ahead and take a look at maybe some commentary on the software sell-off here. Okay.
Let's bring in Sam Lesson. He's a general partner at Slow Venture. Sam, I'd love to know, can you explain, I mean, do you think Salesforce should be trading where it is?
Maybe. The market seems to.
Yeah.
It's a good voting system. Look, I think there's a real question of the ultimate complete commoditization of software and how much you believe the AI narrative and on what timeline, right? In the end of the day, when you look at technology, there are some big global stories being told right now. These narratives are incredibly powerful. And, one of those narratives is software isn't worth much because you can just make it all yourself whenever you want.
But there's a different, listen, you, Sam, had a turn or two at coding, maybe, I don't know. But I'm just saying, I, as the layperson, I can make a silly pizza app with Claude Code. I can't do a lot more than that. So can you explain to me how the pros are able to use these tools and how much of this is because of Claude's latest, introductions to the software space? How much are they really going to steal from incumbents, do you think? Would you invest, in like the narrative that these software incumbents no longer have a place in the marketplace?
Well, I mean, I broadly have exited software a while ago for this reason. I think there's two ways to think about it. One is that the power of the narrative and trading the narrative. The narratives usually precede reality, right? So even if we're not quite there yet, the narrative is clearly built that we are going there. And, there's a real question about exponentials and asymptotes. Right now, we're in an era where for the last 2 years, we've been telling an exponential story about software. And there's been enough proof points to back it up where everyone kind of believes it. Now, where does that asymptote? Does it asymptote at silly apps, or you can build your own Salesforce with one incantation? These are the questions to ask. But I will say that, the more that consumers and people are broadly exposed to this stuff, the more they realize that a lot of things that felt like moats before just aren't moats anymore.
All right. Let me ask you then about an area where I know, I believe you're still long-term bullish, which would be in crypto. And this implosion that we're witnessing before our eyes, what should we make of that?
Look, I mean, the story for crypto's a lot of stories, right? And again, I think you have to really understand kind of the different ways they interact. My joke recently has been that what you see in gold and silver is this great revelation that people found crypto, but without the technology risk, right? And so, I think the broad story of we're not sure what stories to put value in and where to believe and how to effectively do the anti-trade on technology is an interesting one. People are looking for things for that. The problem with crypto, right, is that it is both simultaneously or historically has been part of the super cycle, right, and part of the technology story, and supposed to be the counterweight to it. And which of those stories dominates is the really interesting question. Right now, there's no question that the story of, Bitcoin trades as a risk-on asset along with the rest of technology is dominating the story of this is where you can put money when you can't put it anywhere else.
Exactly.
And we'll see how that shakes out.
Sam, again, I'm going to ask a non-tech expert's question, and hopefully this makes sense around software. Salesforce, I think the genius is, and I'm not picking on Salesforce, Mark's built an amazing company, but they have more companies that service Salesforce than people who work for Salesforce themselves. The halo around it, go to Dreamforce, there's hundreds of companies that sell into it, service it, correct? So if something were to break on the inside, what happens to all the residual, all the orbital moons of these planets, if that makes sense?
Well, the question is what the orbital moves move on to. If, in the end of the day, as my understanding, and it's a secondhand understanding, is the original Salesforce was sold as a platform, but really was Mark building and selling separate instances of a CRM to a bunch of different companies and stitching it together later, right? In an era where you can make your own CRM very quickly, that's obviously a really challenging position to be. Now, the ecosystem, it can move on. Maybe they all become Claudebot developers, right? Or do something else. I mean, there are ways that you can still be in the CRM enablement business to some degree, without a central
Except
star,
a lot of
so
the
to
fair,
speak.
but a lot of those companies, unlike Claudebot for now anyway, and maybe they'll go public on their own because apparently they don't need any humans to do anything. Sam, apparently, like these companies, a lot of them are public. That's part of the problem, is that we're CNBC, so we're looking at these stocks that are down 30 and 40% in 90 days. These are companies that employ thousands of people with real businesses.
Yeah, it's tough. I mean, look, the reality is, let's look at the other side of this, which is like the SpaceX story, upcoming, or the XAI story. We're in this place where the world is so uncertain that everyone is trading these derivative narratives on top and where other people are going to go. And so you see these wild swings. You might have EPS or enterprise value as a baseline story everyone believes. Everyone's going to trade it at a certain point. But so much of these things, the question is, we don't know what direction we're heading. So kind of imagine you're like, everyone's running around. Everyone's kind of at a stoplight, and we're not sure which way to go, right? We know something's changing. We just don't know where the next goalpost is set.
I don't know if there's a bigger version of talking up your own book and like, probably being a venture capitalist. He has a bunch of these much smaller AI names, and the narrative is everything is up for grabs because, the interface and stuff like this can be easily coded, and like, I really am not a believer that this is the way that the software experience is going to go. I think companies, the reason why, they end up choosing the really expensive providers is because if anything goes wrong in terms of the security side, the latency side, the idea that these their software ends up going down costs way more than, the actual licensing in general. And that's going to be so hard to replicate. So some of these patchwork together AI slop companies that are going to try to recreate CRMs, I just don't think we're anywhere near, companies uprooting their Salesforce licenses with their 4,000 employees to go over to some new business that's worth $1 billion that says they're going to save you 95%. The 95% is not worth them losing their data or going down for a few days or a few hours or anything along those lines. The companies with good track records, like there's an advantage to have a big track record. So trust takes time to build. Yeah, I agree. Dude, this is great. It is Search is Dead 2.0. Your Gravy Salad just hit it nail on the head. I completely agree. That's what this is. You've just Gravy, I'll praise you for this, okay? But from here on out, this is my quote, okay? This is Search is Dead 2.0, Tanner 2026. Okay, you can clip this, but I'm running with that narrative, okay, going forward. I completely agree. Gravy salad. I think gravy salad might be, what is that, like poutine? Well, I'm not, you know what? This Tanner steals quotes. What am I supposed to say? Oh, Gravy Salad said that. Like, I'm trying to get across the series. I once heard a great quote from Gravy Salad, and then everyone's going, they don't even hear the quote. They're going, Gravy Salad. Like, what the heck? So it's mine now. All right. Nvidia down 4.2%. And but that is a good one going forward. Google is literally letting us create worlds with just typing a few sentences. This is just the start. Dude, but okay, first off, here's the thing. Well, I agree that this is going to come into the future. Okay? what I found was so interesting is that Unity sold off on this news so hard, like no one could envision that AI was coming to video games. Like, does the market have no vision at all? Like, you guys couldn't 5 days ago didn't foresee that a company would be creating generative video games. After that, the Project Genie thing, absolute slop. Okay, it'll be good, but this is the same thing with like the ChatGPT 3 demos, where like every single prompt was perfect, and then you try it on your own, and you're like, okay, well, it's not really working that well, and everything like that. Like, you're not going to actually be able to make anything useful on Project Genie right now. It's a proof of concept, but like that proof of concept existed before that video came out. I'm just surprised that it took such a big hit. Not like I'm invested in this company, but like 38% Unity is down over the last 5 days. No one could envision generative worlds before that. What did we think Omniverse was? Okay. Gravy Salad's been saying great quotes since day one. Yeah. Well, anytime I say search is dead, this is search is dead 2.0. The comments can flood in with, Gravy Salad, quote stealer, whatever. I'll allow it. I encourage it. PayPal, huge recovery here. No longer down 21%, only down 19.7%. That is a recovery. Yeah, no, this is a bad day. This is a bad day. Where's the fear and greed index? I'm pretty sure it's like not even that bad right now. It's very interesting, how this is affected. But let's go ahead and take a look. Where's fear and greed? Fear and greed's at 39. So we're in fear, but like we're not like nearly as bad as where we were before. Yeah. Okay. CoreWeave Green. Yeah, I know the NeoCloud names. Very, very good names. I like these names as well. Okay. So if I could buy Weeble, maybe. I mean, they might look into a brokerage name. What triggered this carnage? Well, I think honestly, that is up for debate. I don't think people have that answer right now. Maybe it's some Trump concerns. Maybe it's government shutdown concerns. Maybe it's Sam Altman, Nvidia relationship concerns. Like, those companies are big enough to move entire markets. Maybe it's just general U.S. economy. Government shutdown, lack of information. Silver, gold is up. Like, it could be a whole list of everything. CoreWeave green while Nvidia way in the red. People buying Nvidia proxy is a bullish sign on Nvidia to me. Yeah, I know. They just gave CoreWeave $2 billion to buy $200 billion of their chips. People are like, circular financing. It's like, no, it's not. They gave them 1% of their purchase order and got common shares in return at $86. They're still green on that purchase. Okay, ladies and gentlemen, I did an extra 45 minutes. I know this is a very emotional day, so I wanted to lead you guys closer to the end of the day, or stuff like this. So I'll be headed out. Thank you guys so much for watching. Usually we only go from 1 to 2:30, but we went from 1 to 3:45. Sorry, 3:15. But good luck out there. Stay calm. You guys are the absolute best. We're going to become better investors over time, each and every time that these, sort of more extreme days end up coming in. This is what builds that iron stomach. right? Especially if you guys are new, like started investing in 2025 or even 2026, like maybe that iron stomach hasn't been built up, but there will be higher highs. I promise you guys this. Okay? Stay patient. Until next time. Bye for now.